Alright everyone, Cowboy Trades here, welcome back to the channel for another update on KDA. I believe KDA is about to melt some faces, and not in the way that the bulls are probably hoping. Let's talk about it. So about 2 weeks ago or so, we made our last KDA update. Yeah, it's been 2 weeks, so let's get an update out. Let's talk about how I feel about the charts. Now, 2 weeks ago, I obviously talked about my trade all the way back at $1.12, and we amended our stop loss. Since then, we've just continued to slowly chop down to the downside. As of the time of recording this, we are minus 22.5% from our entry. Obviously, we're in a short, not a long, which means that we're in just over 67% profit on this trade at this moment in time. Let's head over to the higher time frame. So what I really said in the last video is, while I do believe we're going to come all the way down to my take profit and melt some faces all the way down here at 69 cent, I did say that as we are currently sitting at this volume profile at 89 cent, we might be here for a short period in time before we start melting to the downside. And now I believe it's finally time to absolutely start melting faces and starting to rocket to the downside. So let's start off on the higher time frames. We obviously just looked at the volume profiles, and you can see where the volume profiles start at 89 cent. We are starting to lose them. Over on this exchange on Bittrex, we are currently at 89 cent. For the rest of them, we're kind of lollygagging between 86 and 87 cent right now. So it's starting to fall beneath this volume profile, and the next level of support isn't until we come back down to 78 cent, which is more or less the lows that we put in down here. And if we do come back down to this formation, I of course believe that we're going to follow this same low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low trajectory. So of course this is where I believe that we're going to break down to our price target of 68 cent. I think that's right around the corner in the higher time frames. As you can see, when I say the higher time frame, it's on the daily, but we're just a little bit more zoomed out. There's been many reasons why we've been talking about why I think KDA is going to break down, and I'm not going to re-emphasize all of them. We've done quite a lot of extensive analysis, and all of that is still true. You can see, we've broken down from this bearish pennant type formation, then we formed this nasty head and shoulders with a price target all the way down at 68 cent. You can also see between 69 cent and all the way down here at 50 cent, which is another one of my macro price targets for KDA. There is a huge volume cluster down here, which I've highlighted in blue. Eventually, as we start breaking down, I'll get rid of this volume cluster and I'll mark this one as the most important. But this is the one that I've got my eyes on, of course, 69 cent, and it looks like we're gearing to finally start breaking to the downside. Let's look at the oscillators and tell you why I think this. Now, over on the squeeze momentum indicator, this is nothing new. On the weekly time frame, we've been absolutely melting to the downside since the 28th of November, which is, what a surprise, pretty much exactly where we entered our trade at $1.12 for KDA. We saw the weekly start to break down. We saw the stochastic start to get very overextended. We saw everything we needed to see to enter this short at 112. And of course, if you needed a refresher, of course, I'm still absolutely in this trade. If I wasn't in this trade, if I made any amendments to the trade, I would 100% make a video and let you know. But what is new is on the weekly time frame, you can see that we are really starting to flip pretty bearish over on the stochastic RSI, and we are approximately sitting around a valuation of 68 to 69 for these two moving averages. So we are very overextended, and you can see on the weekly time frame what happened the last time that the stochastic crossed bearish. It was on the 1st of August. We were trading at $2.15, and you can basically see, we just completely melted down for 105 days. We went from that price target that I just mentioned, round about $2.14, all the way down to 79 cent, which was an absolutely monumental slide to the downside. And you can see, we're putting in a downtrend over on the stochastic right now. Squeeze momentum indicators heading down, and the MFI is pushing up very strongly, which is interesting because, we've just had a move, and this move completed on the 4th of December, and we've been breaking to the downside ever since. However, it seems like a lot of retail traders are trying to push back liquidity into this market, and it just keeps on getting slapped down each time we come up to these price targets. So on the weekly time frame, you can basically see, since we were around about that 79 cent bottom, liquidity has been becoming overextended, and it can't keep up with the price breaking to the downside. We're steadily approaching the heart line, and the MFI is round about 44 right now, and to me, this is indicative that we're gonna get ready to break down to the downside very, very soon. The MFI is heading up and the price is heading down. That is a telltale sign that we do not have the liquidity required to perform in this market. We don't have enough liquidity to push up to a further price target. I'll also talk about some of my other price targets in just one second as we do wrap up this video. Over on the squeeze momentum indicator, this is one of the major reasons why I said I believe a meltdown is coming, and this is probably what I'll title the video. Face melt is coming, something like this. This wasn't for clickbait. This is why, looking at these on-chain metrics, looking at these oscillators, you know, the weekly ones we just talked about, they look like they're getting ready to flip mega bearish to the downside. If we're looking at the MFI on the daily time frames just pushed above 56 and is starting to break back down after coming up to resetting from the heartline. That is a very, very bearish sign. Stochastic RSI has been crossing bullish for the past few days, but price action has been heading down. This, like the MFI, is another telltale sign that if the price action is not moving up with the stock, like you can see over here, price action did move up with the stock. The stock flipped bullish here, and we had enough liquidity because we were so beaten down on this volume profile, the squeeze momentum indicator. You know, we had so much liquidity flow out of the ecosystem, and that was shown in the MFI as well, that we had enough momentum to push back up to the upside. And you can see how the stochastic quickly turned up and price action turned up. But right now, what's happening? Stochastic is breaking up, MFI is heading up, getting overextended, and the price action is heading down. That is not a good sign whatsoever. And besides, the stochastic RSI once again approaching this heartline level, you know, a lot of these oscillators are pushing up and the price action is not. That is a very, very dangerous sign. The squeeze momentum indicator, this is one of the major reasons why I'm going to title the video I'm going to title it. Let's look at the last few times where the EMA ribbons have become, the squeeze momentum indicator has become very, very tight. This is why. A lot of the time on the channel we talk about the EMA ribbons and how when the EMA ribbons, the 21 and the, I believe it's the 55, when they get extremely tight, that is normally when you see a major move come into the market. And I'll show you an example of that in just one second. Let me get rid of all of these. If you're using EMA ribbons, I really only think the only two that you need are these two right here. I don't find any benefit of having any of the ones in the middle, if you're wondering why I only have these two. But I'll show you what I mean by that in a second when the EMA ribbons tighten a big move comes. The same happens with the stochastic, because, or the same happens with the squeeze momentum indicator rather, because you can see basically when you push up to the heartline, you're resetting momentum. And let's look at what's happened the last few times where we've literally almost come up to the heartline, or in these instances over here, we just flipped bullish very shortly. So this was basically a momentum reset. You can see right here, we flipped bullish, like right here. This was where the squeeze momentum indicator topped out, and you can see this basically, if I hide the EMA ribbons, this area here correlates to pretty much this top here before you had a brutal run to the downside. Over here, you can see we came and reset momentum. This was when we were priced round about here, and we broke down from about $1.40 all the way down to $1.20, which is an okay sized move. But then you can see we continued to kind of squeeze and squeeze and squeeze and squeeze and squeeze, and then we flipped over into bullish territory. And what happened as soon as we had this tiny flip over into bullish territory? Well, of course, it's a bear market. We didn't have the liquidity, we didn't have the bullish momentum to hold this uptrend. So what this basically means is you've now pushed into the territory of the bulls, and now because you're in this bullish territory, you've got so much room to move back down for that next breakdown. And of course, what happened? Price action moved from $1.45 all the way down to 79 cents. This was actually a trade that we were running on the channel. I believe we entered at 145 and 140. If not, we entered at 140 and 135. You can go and, you know, verify that back in the day, you know, 4th of November, 5th of November when we made these videos. It was one of those price targets, 145, 140, 135. I entered 2 trades on there. Can't remember exactly if we hit 145 or if we entered at 140 and 135, but nonetheless, not too important at this moment in time. That was a very profitable trade that we entered. We had a 280% return from what I believe was 140, and of course The other one was a 280% profit from 145 or 135. And of course, you know, we've entered another trade on this quite recent reversion to the mean. And you can see as soon as we poked our head above the entry at 112, we really just started falling and falling and falling to the downside. And like I said in the previous video, the reason why we're lollygagging at this level at 89 cent and why I told you 2 weeks ago that we might be here for a short period in time before breaking down is because this is an area of open interest. This is where volume profiles are, and as soon as we start falling beneath this level, we've got no support until, you know, 70 or 69 cent rather. And then as you come down, it's 50 cent, and then as you break down from there, it's 31 cent. And if we start losing this range, it's pretty much curtains down to about 20 cent, which I'm currently not predicting at this moment in time. As you do know, if you're a veteran of the channel, I take these markets one price target at a time until it is ready to pivot. That is how we navigate these markets. Eventually, one of our bearish price targets may be wrong, and then we'll be like, hey, markets are telling us it's time to pivot, it's time to pivot. I would much prefer to do that than to say this is the exact bottom for KDA. I refuse to take in any new financial data. I refuse to look at the stock market. I'm just going to, you know, randomly draw a line where I think KDA will bottom. That's not a good way to navigate these markets. We do things one price target at a time, and right now, of course, 69 cent is what we've been talking about. So a lot of these on-chain metrics, a lot of these oscillators are just telling me that we really do need to start breaking back down to the downside. You can see how flat and how quickly, you know, in the past 2 days or so, the stochastic, the squeeze momentum indicator, keeps on heading back to this heartline level, and it looks like we're getting ready to melt down to the downside. And of course, on the weekly, we just looked at all of these oscillators, and they are really gearing up for a brutal move to the downside. So as we are wrapping up this video, I thought I'd let you know once again, for those of you who are new, or for those of you who just want a refresher, what my price targets are and really how I think KDA is going to be performing into the rest of the bear market that I do think will take place for the next 3 to 6 months before we could see any sunshine and rainbows come back into this market. So we just talked about the KDA trade, obviously round about 67% profit at this moment in time, and we're not too far away from our take profit. This is all the way down at 69, which is another 21% drop. So on a 3x leverage, if this does come down and hit, this is going to be almost a 1.2x return. So very nice. And the reason why I've highlighted this green box down here, why I'm taking profit, is because this is the next volume profile. And the reason, another reason why I'm taking profit down here is, I mean, look at how long price action has lollygagged at this level because we are stuck in this volume profile. As we do break down from this volume profile, I believe we'll quickly head down to 69 cent. Then I believe, as we come down to 69 cent, we'll probably establish a little range around here. We might have a bounce back up. We might do something like this where we break down, have another lower low, and then of course as we come down we find a little bit of support in the volume profiles. It's very likely EMA ribbons will of course start breaking down. This is where I kind of see something like this taking place, another bounce, and then maybe this could correlate to the previous lows. Of course, like I always say, we take things one price target at a time and one trade at a time. We will reanalyze the markets as we come down to 69 cent. I don't think we're just going to start nuking through the floorboards like this. I believe one range at a time. We're going to slowly chop down to the bottom of this range. We've got a KDA BTC 1.618 Fibonacci down here at 48 cent. This is not on the KDA USD pair. This is a Fibonacci that we've drawn on the KDA BTC pair. We looked at how far we would have to break down from KDA BTC, and this is how much in terms of percentages we would drop down on the KDA BTC pair. I believe we talked about that in the last video, Kadena Trade update, or we talked about it over here 3 weeks ago, Kadena Trade update. I won't revise that. The price target hasn't changed, of course. It won't change. It is all the way down here. And then, of course, the last like major bearish price target that you could possibly draw on KDA right now is down here, where we've got a huge volume profile between 31 cent. You've got a point of control at 22.5 cent. And then you've got lows, which are down here at pretty much every single exchange that I cover. They're all round about 13 cent. Where the lows are established. Some of them are a little bit lower, some of them are down here at 6 cent. You can see for most of the exchanges that run KDA, the lows kind of clock in round about these levels, but nonetheless, these are my price targets. Of course, it's one price target at a time. I'm currently not predicting that we're going to come down to 22, but if I'm completely honest, I do not believe KDA will bottom before we come down to this major volume profile at 31 cent. That is a macro prediction, but of course, like I say, one price target at a time, one trade at a time. Let's get down to 69 cent. Let's see if we have a bounce. Let's see if there's a new short opportunity, and we'll let you know where I believe the next price target is. In the immediate short term for the next trade, it'll probably be around about 48 cent. But like I say, I'm very malleable. I'm very okay with taking in new data, which is why I always look at multiple different markets and we take things one step at a time. So what I've got for you for this video, as always, my friends, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want more posts, updates, memes, more things about my personal life, like me chopping things in half with katanas, come over and head over to my Twitter. It is here at 618_cowboy. It's been your boy KDA Trades. I'm out. Peace.